Hello and welcome to our latest Insider interview. Today in the studio I have with me Stuart Widdowson, Fund Manager of the Odyssean Investment Trust. Stuart, thanks for coming in today.
Thank you for having me.
So the past couple of years has been a tricky backdrop for investors to navigate in UK smaller companies since interest rates have started rising at the end of 2021. However, the investment trust you manage, you've outperformed peers over the past 3 years and also over the past 5 years. How have you achieved that?
Well, I think there's a number of factors there. I think the first thing is our focus on valuation. This concept of focusing on buying a discount to intrinsic value and being very clear what intrinsic value is. If you look at where small cap peaked in the late 2021, there are many companies we saw in the market that looked to be trading at very, very significant premiums to their takeover valuations. And we were very, very wary about investing in those companies, particularly growth companies, which was consistent with basically a zero interest rate period where growth significantly outperforms. So I think we've avoided valuation extremities. I think the second is where we did find real value in the market. The market had become very polarised. We had a significant number of takeovers through 2021 and 2022, I think 3 in both years, and at quite significant premiums to their the share price level before. I think really the final thing is really this focus on companies that can improve themselves even if their markets are quite difficult. And what we find is these companies take a number of years of action before the stock market tends to almost see the opportunity coming through. We do think that's a very differentiated investment style to many of our peer group who are maybe price and earnings momentum focused as opposed to fundamentally focused. So it's a very different and we think quite complementary style to many of our peer group.
Over the past year, the investment trust, it's fallen behind peers. Why has performance come off the boil?
It's not unusual, although our long-term track record is fantastic. We tend to only outperform 2 out of 3 years compared with the broader market. And I think a number of things happened last year. So, we don't reinvest in consumer stocks, and there was a significant recovery in consumer stocks, particularly in travel and leisure stocks last year. I think in aggregate, they went about 30% in small cap, and we don't own those stocks. So not owning things that did particularly well. The second was we weren't really significant beneficiaries of M&A last year. Much of our portfolio at the moment is in industrial companies. And in fact, although 10% of UK small caps got taken over last year, none in the industrial sector did. So we didn't have that positive kicker. And we had a few things that didn't work. And on a normal year, we have maybe 2 things that don't work. A good year, 1 thing doesn't work. And last year, we had 3 things that didn't work. And that impacts us negatively. So it's a real combination of effectively not having enough good news to compensate for probably slightly more short-term bad news than we would normally have.
And over the past couple of years, with UK smaller companies out of favour, we've seen a lot of money come out of UK smaller company open-ended funds. And as a result, the UK smaller company part of the market, it's become more attractive in terms of valuations. So when you're looking across the market, are you finding more value opportunities than usual? And could you talk us through your most recent purchase?
We typically only make 3 or 4 new investments a year, and sometimes we don't make any new investments. What we did find was a large number of companies in 2022 where we became investors in, and they were trading at prices and levels where we thought we were going to get a much better return in those stocks than we would normally do over the sector. A couple of really good examples, a new holding in the portfolio is a company called Gooch & Housego. We started building the stake in late 2022. And it's a company I know quite well because I originally invested in it just after the GFC. It's a niche provider of optoelectronic products and systems. And it had quite a difficult period going through COVID. It went through a period of having been a darling pre-COVID to having a number of operational issues as it tried to restructure and consolidate factories during the COVID period when effectively people weren't there, which was quite difficult. And the shares got derated very, very significantly. To give you an example, over the long term, the company is typically traded on 2 times EV sales. By the time we invested, we bought in about 1 times EV sales, so half the long-term average valuation. There's a relatively new chief exec there, again, common theme, and he's set out a target to get to 15% operating margins in the medium term, which we think is about 3 years. And sales are likely to improve. So in that perspective, we thought this looked very interesting, a discount to intrinsic value, self-help going on to drive margins, and effectively a company that we think is going to be worth a lot more in 3 to 4 years' time, even if the stock market doesn't really improve than the company is valued at today.
We're at the start of a new year. plenty of predictions as ever have been made. In terms of UK smaller companies, the valuations are lower than larger companies in the UK market. However, a risk is the possible recession occurring in 2024. Will that harm the UK smaller company part of the market?
Look, this is the most talked about recession that I've ever remembered in my career. The stock market doesn't always necessarily behave in the same way as the economic cycle, and quite often, once recession's announced, the stock market may have already bottomed. The stock market tends to look forward 9 months. So the other thing about small companies, there's a perception that the health of the UK small company sector is somewhat correlated to, again, the UK economic cycle. There are many companies that are listed in the UK in the small company sector that have very little exposure to the UK. Companies that are in the industrial sector maybe export most of what they do, and for them a UK recession isn't actually that relevant. I think it's a factor. I think it will impact the different portfolios and in different ways.
One potential catalyst for UK smaller companies could be the peaking of the interest rate cycle, and potentially there could be some interest rate cuts on the cards in 2024. Is that a view that you share?
I think it's one of the potential catalysts. I think historically, as interest rates have been cut, risk appetite improves, and asset allocators do look at small companies in a broader way than they might have done in the past. I think the whole flows issue is quite important generally, because certainly we do find that there tends to be a domino effect. One or two things happen, people change their minds, and UK small companies has been so unloved for such a long time. We don't think it requires much in the way of assets back into the sector, be it triggered by interest rate expectations or just the absolute valuations, people seeing the opportunity. We don't think it's going to take much to see some quite significant moves in the market. We can't predict when that's going to be, but having worked through 2009 in the aftermath of the GFC, when it happened very quickly and very substantially. We don't know how quickly it's going to happen, we don't know when it's going to happen, but my gut feel it will happen within the next 12 to 18 months.
And finally, the question we ask all fund managers: do you have skin in the game?
Absolutely. So for my kids and for me, our investment in OIT is by far and away our biggest investment.
Stuart, thanks for coming in today.
Thanks, Carl.
So that's it for this episode of our Insider Interview video series. Check out the rest of the series on our YouTube channel. Please let us know what you think. You can comment, like, and please do hit that subscribe button. And hopefully, I'll see you again next time.